Traders, how the fuck you doing? It's Tommy and I'm back with another video. Sunday. Now this is going to be a little bit different. I'm going to actually break down a back testing session I went over and did on Twitch. So hopefully you enjoy it. And yeah, let's get straight into it. So the first thing which I recommend a lot of people should go ahead and do would be to go on a higher time frame and just drop into a random point of the chart. Now when I say random, obviously you want it to fit towards your strategy to some degree. So for example, I'm a structured trader, so I will look at the market structure and I will look to where there has been a lot of highs and lows, or where there's been a lot of trends within the market, and then from there I will mark off and I will just go ahead and play through the price action and look to get entries in high probability areas. This looked to be the first trade of the session. For quickness purposes, I did just quickly edit and just put on a technical analysis, which you would see in a second. So here was the kind of play that I was kind of feeling. I had two levels marked up. I had the rejection from its previous high, which I was just going to do the stops over the top of that, and then I was looking at this kind of break and retest from the trend line. And I was going to target, my first area of interest would have been the level which we had a reaction from before, and yeah, we got tagged in and I was just going to let it ride out. Just fast forwarding a little bit, I saw the moving averages were going to cross over, so I wanted to just mark up my RR from current price just in case we got a rejection and it hit me out, but it seemed to break par, so I was like, okay, let's target the original TP, and yeah, let's just see if we go ahead and hit this level. I started to see a reaction from this level, so I was like, I might as well just set SLs to break even, so just in case I do get stopped out, I don't lose any profit. So I did get very lucky. I thought I was going to get tapped out here, but I kind of just got away by the skin of my teeth. It did hold, and finally it did hit TP. Coming off that trade, we was up 3.2%, so it's very good. I was looking at this other kind of trade, potential shorts. Structure looked quite nice, however we did get a strong hold from that level, which I currently took TPs from, so it was most likely looking that we was going to get stopped out for 1%. Well, you'll see what happens next. Hopefully I didn't make that too obvious. There we go. So yeah, I got tapped out for 1%. It is what it is. I did feel like it was a risky trade, but at the same time structure was looking kind of bearish, so yeah, it was looking likely. Well, there was a probability that it could have played out, but it didn't in this case, so yeah, it is what it is. Move on to the next one. So being up 2.2% on the session after losing that 1%, it's always great. And the thing I love about having a nice risk to reward is you can have a okay win rate and you can still be a profitable trader. So it's just something to keep in mind. Risk to reward is maybe, along with risk management, is one of the key things within trading to be successful, to break past that 80%. So yeah, this was the next level where I was kind of looking at. So my thought process was kind of this for this long. We had rejections from this level, but knowing stop loss placements and where liquidity is kind of placed within the markets, I felt that this was going to be the impulsive move to the upside if we take out that level. There was a nice little trend line in play as well, which I'm going to draw on the chart right now, even though I didn't mark it up. Even though I took the earlier entry, there were strong signs of the level holding, and I felt there was more probability of us breaking up and going higher than breaking down. The structural higher highs and higher lows, again, since I'm a structural trader, it did have more confluence for being bullish and bearish, and plus as soon as we broke up through that resistance level, I thought it was more likely for us to see that TP get taken out very soon. So yeah, it was a good trade, and I think that was a 4 RR
For this current backtesting session, we was up around about 6.2%, so it's a good little test session so far, and hopefully we can keep it going. This trade was crazy. I think it ended up being that 9 risk to reward. So yeah, it was a monster play. But that's why I think sometimes when you're trading, it's best off to leave some partials running, especially if you're trading structure legs. As trend is your friend, and as long as the trend is bullish, you're able just to keep the position open and keep them running. So this was the next trade I was kind of looking at. After we had that massive run, I felt the market was just getting a little bit sleepy. We had some topping action here, and market looked like it was going to break down. Moving averages were crossing over. There was also that trend line, so we had a break and retest in play as well. So I was just looking for some moves at the downside, maybe even a head and shoulders pattern, which I felt was likely going to play. So I was going to get in on the right shoulder and then ride it down to some potential imbalance levels from this impulsive run which we had. I'm a big believer of going and scaling through or cycling through different time frames, especially the 4 hour. I think it's a very, very powerful time frame within Forex markets, and it just allows you to just get a bigger and better picture of what's going on. When in doubt, zoom out, and I feel like this is a great example of that, and especially the way the 50 held price. It was very, very good. This is probably my best trade of the session. As you can see, it was a nice head and shoulders pattern as well. I was just targeting the imbalances within the market. We was already at like 2.6%, so I was kind of just targeting these imbalance areas or fair value gaps, which some people may call them, as my potential target. So yeah, this was a 5.7 risk to reward, and yeah, let's just see what happens. I also set my stop loss to break even here because I was like, you know what, there's no point keeping it open. Like, even though this is just the practice session, it's not real money, but it's good discipline, and it's good it's good to just have these habits within trading at all times. So yeah, we finally did get that take profit. Again, a nice trade. I think it was like 200 pips. Again, this was another monster trade, 9.5 RR. It did play out the full head and shoulders, which for those who don't know, the way you mark up and play a head and shoulders pattern is you will go from the head to the neckline, and then you'll double it, and that will give you your overall target for you to just have your take profits at. So again, it goes to show why you should always typically trowel your stops or keep partials open, and make sure you can just take and ride this whole kind of position. So yeah, it's a great way to be trading, especially trend is always going to be your friend, and as long as there is structural bias, there is still structural bias. It's fine to keep the trade running. So now I'm going to just fast forward to the next position. So I took a little position here, and I felt it was a riskier one, but I saw the bias was still bearish. I was like, okay, cool, it could be like a triple top type play. I still had the neckline as another level of resistance, but okay, cool, I got stopped out here. It is what it is. But in my head, I was like, it's still a good trade, and if another opportunity presents itself, I will go ahead and take this trade again, because in my head, if I have a trade which I am bearish on, or I have a bias on, and I get stopped out, but I feel like my bias is still holding true, I would just get in the trade again. And I've done this for my last video. If you go ahead and watch passing the evaluation, I took a trade on my Forex funds account, and basically I got stopped out on EJ and EG, and I basically was like, okay, cool, it doesn't matter, I'm still bullish on the trade. I'm just going to go ahead and take another position when the opportunity presented itself. And yeah, it presented itself and it came in. I made like 6% on that one trade. So yeah, it goes to show that you shouldn't be scared if you lose a trade, especially if your bias is still valid. You should go ahead, look for another entry, get in, and yeah, again, look, that goes to show that's another 4%, and you're losing 1%, right? It doesn't matter, because like if you're making 4 RR, right, you can afford to lose that 1% because you're still going to make it back times 4. Or so yeah, it's a no-brainer really. And it goes back to being systematic when you're trading. You want to trade like a machine. You just want to trade the charts, and you really just got to kind of get your emotions under control, and yeah, just trade like a robot basically. And that's the best way to kind of go ahead and approach the markets. This trade's all about taking riskier entries and why it's okay to take riskier entries. Now, what I'm doing is I'm taking positions in still areas of interest. Now, this ain't a gamble trade. This is just looking for those snipers, getting that maximum risk reward, which you can basically kind of get if you approach the markets correctly. Now, if you look on my left, similar from where I took the trade before, we had a hold around this level before we had a massive swing to the upside. Now, it's social science, and there's levels within the market which, where there has been a reaction before, people will go ahead and look at these areas and be like, okay, cool, right, that's a good area to buy at, that's a good area to sell at. Now, I couldn't tell you why, but other than people who trade know that looking at historical price action, it can help predict future price action. But if you don't want to take the riskier entry, it's fine. You could have took an entry right there. That is a safer entry that you could have taken. That was probably the confirmation of the bullish trend. But from where I took a position, that was a higher low. The moving averages were crossing over to the upside. There was a reaction from this level in the past. We was in a massive downtrend, so the market was getting sleepy. It's possibly oversold. So there's a lot of confluences within the market for us to go ahead and take entries where we did. However, if you wanted to be a little bit safer and wait for the absolute confirmation of the bullish trend, then yeah, it was fine to get in on that little pullback. But I'm now going to quickly fast forward, and yeah, I will go ahead and talk to you in the next section. We seem to get a little bit of a break of structure here, which is fine. It's normally people who are trying to take profits, or people who are kind of just counter trend trading, which, you know what, like, I can understand. There are some times which I will counter trend trade myself, but the majority of the time, trend is your friend. You want to be on the side of the directional bias. And yeah, and in this case I was looking for another entry, and it goes to show, right, the sniper which I got, right, it doesn't matter, because if you miss a sniper, there's going to be other opportunities within the market which you can go ahead and get executed into, and you can get filled, and yeah, you're a happy guy or you're a happy girl. It goes to show, right, patience is a virtue, right, especially in the market. Sometimes you need to sit on your hands and you need to just wait for the markets to come to you. Now, this is a great example, right, of, okay, you might have missed the first entry, you might have missed a second entry, but okay, cool, you can get a third entry. Now, these are just types of examples when you are trading structural legs within the market. When you're trading structure, there is a lot more opportunity for you to take trades, because really all you're doing is you're just trading the highs and lows within the market, and as long as you're getting fairly early within the first couple of highs and lows, then you are going to make money more times than you lose money. And then again, we are only risking 1%. Now, if you risk 1% and you lose it, it doesn't matter, because like you see for this session, my average risk reward must be like 3.5 now. Like it's ridiculous. And like I'm doing all of this live, I've done it all on Twitch. You can see like the raw footage. I'm going to do a couple more before I call it for this breakdown. Hopefully you've enjoyed the video so far, and if you have, make sure to leave a thumbs up and let me know in the comments that you've made it this far. But this was a little short that I was also looking to take. I felt like we touched into the resistance level, which we had a reaction from in the past. That was the level where I was taking shorts from prior. You can also see the moving averages were looking like they was going to cross over. We had a trend line which got voided, so it's looking like a break and a retest, as well as a head and shoulders pattern, which I'm pretty sure I draw out now. But yeah, it was close. If I got tapped out there, I would definitely got in again, because I felt that it was a valid trade. I was only targeting this level because there was a lot of support elements at this current range. For example, there and all around that area. So that's 2 times. That's 3 times. That's 4 times. So it was 4 taps in that area. So that was the reason why I was taking profit so soon. But 2RR is a great trade. As long as it's over 1.5 risk to reward, I will always take the trade, as I feel that if there's an opportunity, you should not cease to take it. I saw this little triangular formation kind of playing out. Also, could have been said there was a little bit of a bull flag to be played, but I was just kind of waiting for price, see how I was going to react. I definitely felt that it was more bullish than bearish. So I took a trade off the break of the triangular wedge. I felt that was kind of the break, the retest. The moving average looked like it was crossing over, so I felt like it was a fair enough trade to go ahead and risk. But it went straight into drawdown, and I was like, oh, we're probably going to get tapped out. And sooner or later, we did actually get tapped out, I think. Okay, so apparently I didn't get tapped out. I really did think I got tapped out on this trade. And you know what, that goes to show sometimes when you take these earlier entries, when you take these riskier entries, you can get tapped. So it's always good to have a fairly reasonable stop loss, and you're having your stop loss in a sensible position or a sensible spot, because when you take these entries, there are possibilities for you to go into drawdown and for you to get taken out of the trade. So again, maybe sometimes it's better to sit on your hands and wait for the clear of structure. But for me, where I got into that trade, I felt like it wasn't a bad thing. I just set stops to break even here, just to be safe. Always when you're riding and you're in profit, it's always sensible just to keep your stops at break even, just to protect you from taking any silly losses, and yeah, protect some profit as well. This kind of looked like another like a little area to take a position from. Moving averages seem to be wanting to cross over to the upside. There was nice holds around this kind of support area, and thinking about it as well logically, this was kind of the pullback from the original breakout of that kind of triangular formation. So it was a nice little entry point to kind of just go ahead and snipe. And I'm pretty sure this one rides to take profit, if I'm sure, but I will speed it up. These 2 trades finally hit take profit. I feel like it's always good to go ahead and be able to take more than one position in a trending market. I think as long as the directional bias is on your side, and as long as the market structure legs are still trending in your bias, it's fine to go ahead and take that trade. And that is a perfect example. I've done a few of those where I would just kind of stack positions as the market kind of moves. I took this little triangular wedge, which I felt there was going to be a breakdown, moving averages was crossing over. We was in profit for some time, but we eventually got taken out for 1%. And do you know what, like, I don't mind. Like, that trade there, I felt like it was a good trade. I felt there was enough confluence. I felt it was bearish, and there was some type of there was types of signs of potential reversal. But you know what, some things don't always work out, and again, this is trading. We trade probability. Nothing is 100% and nothing's ever guaranteed. It's okay to take losses, move on to the next one. I think it's also very important to be able to zoom out and mark up key levels of support and resistance, or levels where there's been a key reaction from in the past, to help us gauge where future price action could go. Now, I'm a big believer of this type of trading and doing this type of markup, because it allows us to well, it's not an exact science, but it allows us to get a clear idea of where price could go, and levels where price could get a reaction from. This is a great example of that. I was looking at this level as a potential level of resistance. In the past, this level has obviously been a key area which there has been a reaction from prior. So seeing that there is rejections from this zone at current price action, it led me to believe that, okay, cool, we could see somewhat of a breakdown here. If you kind of see, there is a kind of a trend line which has been broken, so it could have been a potential break and a retest. As you can see, price clearly took me out here for 1%, but do you know what, I felt the area which I was eyeing up, it was a good place to take the trade from. We even got another rejection from that area, so I was like, okay, maybe I just got in a little bit too early. Let's see if we can get in again. 1% is what it is. The previous trade that I took, like, I made 4%. Okay, I got took out again. I didn't notice that soon. Lost what, 3 trades in a row, that's 1% each. My last trade was a 4 RR, so even though I lost 3 trades, I've still had 1 trade which has done 3 losses, and I've still got a 1% gain. So to show that risk management and risk reward are the 2 key fundamentals you need to be understanding and having in trading. I thought I'd try my luck in this area one more time, but I got taken out again. So I did actually lose 4 trades in a row there, and it goes to show, right, sometimes you might be trading a level which there has been a reaction from in the past, and people might be eyeing that level, but it might not go your way, and that's life. So if that happens to you, don't get discouraged. It happens to the best of us. You just gotta keep on grinding, and you just gotta keep on thinking that, alright, cool, I might be on a little bit of a losing streak right now. I'm gonna go ahead and have a break from the charts, or I might have to go ahead and trade something else, and just have a little detox, come back to it, be refreshed, and get ready to go again. Yo, thank you very much for watching the video. Hopefully you got some educational tips out of it. If you did, make sure to ask me for part 2. I'll most likely do part 2 anyway. I've got some more content that I want to go ahead and release. But yeah, in the meantime, like, comment, subscribe, and I'll catch you on the next one.